Hi friends, this is Kabaksha from Swecharts Consultancy Private Limited. Swecharts is into training on technical analysis, and we started with a series of videos on introduction to technical analysis. This is the fourth video in the same series, and in this video we are going to talk about market trends. So let's understand the trends in market. So namely what we say, there are three trends in the market. So there are three trends. First trend is uptrend. Second, you can say downtrend. And the third one is sideways. Right, so these are the three trends in the market. Now let's see each of them one by one with a proper example of it. Right, so now let's see uptrend. So now I'm going to say here uptrend. So when do we say that a particular stock or the market is in uptrend? For that we need to understand a pattern in price, right? So let's say this is a particular bottom in the market, right? So this, I'll say that this is a bottom. So let me name this as a bottom. Now the other word for bottom is demand, right? So it is a demand zone. So friends, relating to a normal economics, if there is a demand of a particular thing in the market, what will happen with the price? The price will rise, right? So if there is a demand in a particular item, we know that the price of that particular item will rise. So what happens is the price will move like this, right? So this is what we understand, that there is a rise in the price. So if I say this, my bottom is this particular level. Say if I have to say roughly 100. Okay, so I say this is 100 rupees, and from there I am here around, which is say around 130 rupees. So I have gone from 100 to 130 because at 100 many people felt that there is a good opportunity in this particular stock to rise, and since it is rising right at 130, we may see that many of us who feels that it is a 30% return, it is a good return, and they will now start selling. So if I have to mark this particular level here, this particular level at 130, I would say this as a supply zone or a top. Top is also equivalent to supply zone, and when we know that there is a supply in the market, we see that the price will come down. So now what will happen with the price is it will come a bit down. Alright, so now at this level what we see is that the price has dropped. Say it is around 120 or 118 is the level in which it has fallen down, right? So if I have to just say this, I say 118 is the price at which we are now. Now many people who had not entered here and they missed this rally from 100 to 130, they feel that at 118 it looks attractive. One thing. Second, many people who had entered at 100 and yet not exited, okay, So they feel that it is a good opportunity to add more, right? So there is more demand for the same stock at 118 now, and the people who had booked their profit at 130, now they know that this looks attractive again at 118. So they know that they have made already 30 rupees in this, and now if they enter at 118, they have still made 12 rupees in this particular stock till date. So now they can risk at least 12 rupees and see if it rises from here. So which adds to more demand of this particular stock at this level 118. So now what happens at 118 is that my demand zone or my bottom is now moving higher. My earlier bottom was 100 and now my new bottom is at 118, right? So now this becomes my higher bottom at 118, and from here now, because that the demand has increased, what will happen to the price? The price will move higher. So now it goes till the limit, say now reaches 160. So now the price is here at 160, and this becomes my higher top, or I can also say this as a higher supply zone, right? So now what we will see, again there will be few people who will feel that they have made enough money and they might now book their profits. So again at a top, what we have seen is it also acts as supply zone, and in a supply zone it will come down. So the price will move a bit lower from here, and it comes, say it comes here till 144, right? So now again what we see is that my bottom, which was earlier at 100, then 118, is now at 144. So if I say this is 144 is again a new higher bottom, right? So this again is a place where people would then think that it is more attractive and more participation will take place, and which is going to push the price more higher. So now it reaches 200 mark, right? So now if I say here it's 200, a new higher top, right? So friends, and this is something from here it falls again, say it is till 185, right? And from here again I may see this as a new higher bottom. So now friends, understand what and when do we say that we are in an uptrend for a stock or a market. Whenever my bottoms or my demand zones moves higher and higher, along with my tops or my supply zones moving higher, we say that we are into a higher top, higher bottom type of a market, and higher top, higher bottom is called as uptrend. So when the price is moving in this fashion, which we say that it is following something called as higher top, higher bottom, or in short if I say HTHB, then it's an uptrend in the market or for that particular stock, right? So this is what an uptrend is. Now let's understand what can be the downtrend, right? For that let me go down. Okay, so if I have to put here downtrend, in this case what is going to happen, right? Any ideas that you can think of it, right? So if I have to say that there would be a supply zone at the top. Okay, so we know that this is nothing but a top or a supply zone. Okay, and say it's around 375. Okay, so my price is right now at here, and there are many people who has made some money in this, and they feel that now this is the price at which they should start booking their profits. So at supply, what will happen is the price will start to come down. So say from 375 it falls and it comes down till 315, and this becomes your bottom for now. And at this place what will happen is few people who have sold here will think that it's now time to buy this again, and whenever the buying starts, we know that at bottom we also call it as demand zone. So there would be demand for this stock and there will be a price hike, right? So this will move a bit higher, and say this forms a price at around 340. So at 340 now we get a lower top or a lower supply zone, right? Earlier my top was 375, now it is 340. So I get a lower top than my previous top. Now over here again people will find that this is somewhere at a higher price and they should start booking some profits, and they start booking say some profits here, and the price starts falling beyond this, right? So if we see here again, let me zoom this back to 100%, right? And what we are seeing now here, that it has come down till a price of 280, and this becomes a new lower bottom, right? So this is a new lower bottom, and from here the price might see a bit rise, but it will not be able to rise higher, and it stops here. So say that this level is 300. Okay, so now I get a new lower top than earlier. So we see how the price is moving. It is now moving from the highest top, which was 375, then a lower top than that at 340, and now a new lower top at 300. So this is how the price is now moving, and we are also seeing that the bottoms is now getting lower and lower. So now if I say the next bottom comes around from here at level here, which is say again 245, right? So if I say this is my new lower bottom at 245, I have a new lower bottom. So what we are seeing is a pattern how the price is actually flowing. If I have to just put it in the short, it is making a lower top, lower bottom, and this is what we call as downtrend. So if there is any price of a stock or a market following this type of a pattern, we call it as a downtrended market or a downtrended stock, right? So hope the two things that we did so far, uptrend and downtrend, is clear. Now let's understand the third trend in the market, which is the sideways market. So for sideways market, what happens is we have got a defined supply zone and we have got a defined demand zone. So what I say here is, this is say the level of 1250, which is acting as a supply zone, and this is say 1100, which is acting as a demand zone. And what happens is the price in this case will move from demand zone to the supply zone, and then from the supply zone it will come back to the demand zone. So this is how the price is going to keep moving. So what it's going to do is it will keep moving into a fashion like this. So it will keep moving from demand to supply and supply to demand. So when the price is just oscillating between demand and supply zone, we call this as sideways trend, right? So now friends, what according to you is the best trend in the market, right? Up and down trend are the best because you can easily trade those stocks in the market, and for a trader, sideways market or a sideways trend is an opportunity coming up, because once either of the side has been broken, say if the supply zone has been broken from here, then we know that it is then going to go into an uptrend, because then it gives a higher bottom and a higher top. And similarly, if the demand zone is broken, then it will form a lower top and a lower bottom. So while a trader is busy trading into the uptrend and a downtrend, at the same time he is always watchful for the sideways to change into either an uptrend or a downtrend, right? So now we have a clear understanding of the three trends in the market. Hope this video was helpful to you. Like the Swaychart channels on YouTube for more and more videos. Thank you friends.